Welcome to Ag on the Edge. My name's Louise Lampera, and I'll be your host today. Today we're joined by Ed Terry. Ed Terry is a fourth-generation family farmer here in Ventura County, and he's an economist and professor of finance at Cal Lutheran University. Our conversation touches into some fascinating insights into the agricultural industry, both locally and at the international level, and delves into some economic realities, questions, and potential solutions. Have a listen. Welcome, Ed. I'm so thrilled to have you talking with us today.
Well, thank you for inviting me, and I'm looking forward to the conversation.
Well, you bring a very interesting perspective to Ventura County agriculture. You're a fourth generation family farmer.
Yep.
Your family has farmed in Ventura County for 120 years.
About a little longer now, but 1894.
Wow. And your son Will, fifth generation.
Yep.
Right.
And daughter. Yep.
Was president of the Farm Bureau.
Yep.
Right. And your daughter Alyssa, actually manages a lot of the agricultural labor.
She runs our labor company.
Yeah. Yeah. So very, very strong family ties to this county.
Mm-hmm.
But you have a completely separate career as well as an economist.
Sort of, yes.
So
closet economist.
Closet economist. And you're a professor of finance.
Senior adjunct professor of finance at Cal Lutheran University.
Okay. And I know that you're heavily involved, always traveling, giving talks, analyzing things, and the like. And I'm really excited to get into how your economic mind influences your farming operations.
Great, yeah.
But to start off with, let's talk a little bit about your family, the farming history. How did this all start with the Terry family, and what are you seeing today that's different from in your grandfather or great grandfather's time?
Okay, so my mom's side of the family, her grandfather and grandmother were living up in the Porterville area, Pixley area, and rumor has it he was working on a farm, and his wife was called a bonded servant. She was working for some family up there. And after they got married, they wanted to start farming. Well, they met a gentleman that bought real estate in that area who also owned real estate here. In fact, that real estate is now the Ventura Auto Center.
Wow.
And same family. And so they got literally in their horse and buggy and rode down to Ventura County, arrived in early 1894, and they started farming the property that is now the Ventura County or the Ventura Auto Center from the Ballou, now the Hofer family. And my mother and her father actually lived on the farm. There was a house there where the old casino was. Apparently there was a house there, and that's where my mom grew up. The grandfather, he retired, and he lived in Santa Paula, and they had 4 or 5 kids, and my mom's dad was second oldest. They were farming here in the Montalvo area. So my mom grew up in Montalvo. My dad was actually adopted, and his adopted family started farming here in, early 1900, 1901, 1902. They rode a whaling ship over from Portugal, and literally his adopted grandfather jumped off the whaling ship up in the Santa Maria area and worked up there and cleaning a hotel, as a janitor, came down here and started farming.
Clearly whaling was not his career choice.
It was not his career choice. They apparently lived in the on the island of Fial, and the Azores, and they were starving and decided to work on a whaling ship and ended up here. He married a lady, and moved down here, and then my dad's adopted father was farming up in the Somas area. And then my dad and mom both went to local schools. My dad went to Santa Clara High School. My mom went to St. Catherine's at the Montalvo Elementary. All of her family went through Montalvo Elementary. That's where I went. And my dad went to Santa Clara Elementary, but split time between. His parents got divorced after he was adopted. So he split time up here and then would visit his mother in LA area. So my dad went to Santa Clara, my mom went to Montalvo, then my dad went all the way through Santa Clara through high school. My mom went to Montalvo Elementary and then to St. Catherine's. And then they met, they knew each other before the war apparently, and then after World War II, when my dad came back from the Philippines, they got married. And then there were four of us, four kids, and I'm the youngest. I like to joke that I'm Catholic birth control, so because I'm 7 years younger than my brother. So I'm going to be turning 65 here in a week or so, and went to Montalvo Elementary School, Anacapa Junior High School, Buena High School, played football, went to Cal Lutheran, played football for 3 years up there, did track for 4 years, got my undergraduate degree in business, and then I got my MBA from Cal Lutheran. Shortly after I got married, one of my economics professors, Jim Esme, who just was a mentor for me, came to me right after I got married and goes, "Hey, Ed, I think you ought to teach." And I go, "I've never taught." And he goes, "No, I think you'd be good at it. Give it a try. We have an opening." So they offered me a position teaching finance and managerial economics. And so I did it, and I really love it. And 38 years later, 39 years later now, going on my 39th year, I do it. I do 2 classes a year in the fall. I don't have time to do it as much as I used to, but it's just something I enjoy doing in the evening, and it's a big diversion from what I do during the day. And then I'm on 3 corporate boards and one charitable board.
Nice, nice. And I think probably through that lens, I've heard you say at other meetings and the like that you view agriculture as kind of a stool, shall we say, or a chair with 3 legs. One leg being land, one leg being labor, and then the third leg being capital.
Yes.
And tell me more about that.
Okay, when people want to talk to me about ag and how I view ag beyond just growing crops, I like to explain that, like any other business to a certain extent, but agriculture is a 3-legged stool. It's land. You have to have the land. Along with the land, that includes the water, labor, because we are a very labor-intensive area here in Ventura County. We have to have labor to plant and harvest our crops, and then capital. You have to have the capital. And the capital is provided either, through owner's equity or borrowed capital or a combination of the two. So land, labor, and capital are an integral part of what we do. And I think it's lost on a lot of folks that agriculture, there's this kind of myth that you look at the Gothic American photo with Grandma and Grandpa with the pitchfork out there, and that's agriculture. Yeah, maybe that was agriculture at the turn of the century. It's not agriculture today. Agriculture is a very sophisticated agribusiness. Even our small family farm, it's very sophisticated. There's a lot of moving parts that go along with it. Our family is a family that we don't take a lot of vacations. We concentrate on what we're trying to do and trying to do it the best we can. And in many cases, over the course of a number of years, you're scraping by. We're not a landed gentry family. We're not a wealthy family. We make our income from farming.
And how does, when you talk about the capital portion of it, it's equity driven, right? It's or
debt
driven. Where does that capital come from?
Well, in our case,
exactly?
we're very involved with the farm credit system. I sit on 2 boards within the farm credit system. Farm credit system is a integral part of agriculture across the country. It's one of the main forms of how farmers get debt capital. It's a co-op. So you are actually, when you are a borrower of the Farm Credit System, you're an owner of the Farm Credit System. And as opposed to just borrowing from a commercial bank where it's a commercial bank, and if you want to own it, you better buy stock in it. The Farm Credit System's different. It's a cooperative. And it's a very well-run cooperative for farmers and rural infrastructure and things like that. So the Farm Credit System is where the borrow capital comes in our case. And then the equity side is any profits we generated. Probably 90% of that money is plowed right back into the company for capital improvements.
So it's not necessarily that a system where, okay, last year I made 20,000 per acre, and so now that 20,000 goes back. It's I made whatever I made, and to make up the difference for moving into the future, you go into that borrowing system?
Yeah, it's both. It's no different than any other corporation. You have what's in finance we call it an optimal capital structure. You're trying to get the optimal proportion of equity and debt to manage the company. Now, some farmers may not need to borrow money. They may just use all their own money, which is fine to operate on. Other farmers may not have a lot of their own money, so they use a lot of borrowed money to buy land or operate on. The optimal way to do it is a combination of both in some proportion that makes you comfortable and maximizes the value of your organization. So there's no hard and fast rule I can do it mathematically for you, but it's a combination of the two in our case.
Okay. And how many years out into the future are you projecting, right? Because I'm guessing you're not getting a 30-day turnaround loan.
No. It's so there's two components to it. There's a 12-month plan, for the crops you grow, but then also there's a longer term plan of the crops that you want to grow over, say, a 5-year time horizon and where you're trying to end up. Now, everybody knows agriculture is variable. You could have a giant windstorm, rainstorm, or a freeze event, and what's that old adage that God laughs at our plans?
Yes.
So that's exactly right. You have a plan. It's it's kind of the football field within the lines, but within that you're gonna move around.
Okay, so yeah, I mean, as we've seen in Ventura County, 1 month will be in a crushing drought, right, and losing crops that way, and then 6 weeks later we have some of the biggest floods.
Right, exactly.
Right?
And your crops are underwater.
Exactly.
Yeah, where 6 weeks prior, it's like, oh, look at this crop, and now it's floating down the river.
Right.
So yeah, exactly. That's exactly right. It's a very variable industry, dependent upon more things than you can count on.
Huh. And in a previous conversation, our guest was Lisa Tate, whose family farms in the Heritage Valley, Santa Clara River Valley, and she was talking about the difference, especially in the planting time horizon for orchard crops versus row crops.
Right.
And so, but both of those still are reliant on this equity and debt.
Yes.
Just a longer horizon.
Yeah, and that's a great example with recently a lot of lemon groves are being pushed out after 30, 40 years.
Yeah.
People may go back to lemons or avocados, but there's an immediate upfront capital expenditure. What are avocado trees? $40, $45 a tree.
Wow.
Times 200 trees an acre. Well, you have one or two ways to buy it. You either have enough cash to just buy it from the nursery, or you're going to have to finance it through some financial institution and amortize it out over a number of years. So everybody has their own financial situation, how they want to do that. But yeah, that's a great example of a very long-term crop with a 30, 40-year planting horizon. Much different than me growing a crop of cilantro that may be harvested in 38 days, and then I've got to turn the ground again. Right. We were involved in citrus farming for 100 years. We got out of it in the early 1980s, and strictly our row crops and now.
Okay, and that $45-ish roughly per avocado tree, though, that's the cost of the tree
itself,
right? It not the cost to plant it, not the cost to water it, prune it, care for it, whatever.
Well, so using my three-legged stool of land, labor, and capital, so the tree would fall into the land, the water's in the land, the infrastructure to be able to irrigate the crop is in the land. The ground preparation, all those things are in the land stool. The labor, they're planted by hand, right? And then you have to care for them by hand. I don't think there's any, you can automate some of the processes like irrigation, but a lot of it, spraying weeds and things, which are getting more AI oriented. And so you have the labor component. Then the capital component is, how are you going to do those first two?
Right.
And that's where the capital component comes in.
And do those first two in the case of say, keeping on the avocados, for the 5 years before you get your first crop.
Before you even start getting cash flow back to pay for the other two.
And where does, because how do you know that, okay, I'm planting the avocados today, 2024, right? My first harvest will be 2029, 2030. How do I know what the market will be?
That's a great question. And you forecast. You're looking at history. So what I like to do at any commodity is I want to look at the last 5 to 10 years of pricing, and you find an average. And what I found in agriculture, most things, unfortunately, and it's becoming very self-evident this go around of inflation, generally the prices you get for a commodity, there are exceptions, the prices you get for a commodity aren't much different today than they were 20 years ago. The difference is maybe the productivity, the technology that goes into these crops, where we're getting better yields and things like that. Now, in the case of avocados, there is a steep demand curve out there with consumers for their avocado toast and things like that. So per capita consumption, I think the last stat I saw was 20 years ago, it was like 2 pounds per capita in the US. Now we're at over 9. So the growth in consumption of avocados has been tremendous, maybe exponential. We're nowhere near what in the country of Mexico, I think it's 25 pounds per capita.
Wow.
So we've got a lot of growth in that industry. So that's a reason why people are looking at avocados in Southern California, because you can't grow them all over the state because we have great climate here in Ventura County. So a lot of folks are looking at avocados as maybe something that will be a good crop over the next 20, 30 years.
Okay. So it sounds like almost every farmer has to have that little bit of economic background to understand the forecasting, to calculate and project out your costs.
And if you don't, you should seek out help. Yeah, we wing a lot of things, but one of things like that are massive capital investments, you need to sit down, put pencil to paper, and go ask a lot of different folks for their opinions on your analysis.
Yeah, and I find this fascinating because I've certainly run into folks and had conversations, I'm sure you have too, where people who love farming, want to support it, but aren't farmers, start asking the questions of, well, why did you plant that? Why don't you plant some other crop? Why something that uses less water, or something that it doesn't require pesticide or whatnot? But all of that is factored in. And what I'm hearing you say is that farmers are very deliberate. They've accounted for all of that.
Yes.
How much will the water cost me?
Yep.
How much will the labor?
Yep.
And what's the market?
What's the probability of the market price to be able to do better than break even?
Right.
But something my dad told me, I think I was in high school, and it stuck with me. He goes, if farming was so great, all the grocery stores would control the farms. They want nothing to do with the farms. I mean, they may dabble around the edges, but every time they've dabbled around the edges, it's been a failure. But yeah, that's a really good way to think about it. A major corporation like a grocery store that you may shop at has investors they need to satisfy with more predictable cash flows. A farmer, on the other hand, is no different than a riverboat gambler, right? And they're going to roll the dice and hopefully make it, have a really good year out of 5, and they may have a break-even year for 2, and then 2 years are going to lose money. Well, major companies that rely on cash flow and satisfy their investors can't do that. They don't have the stomach to do it.
And they're actually reporting horizons are shorter too, right?
Well, they're
Major
reporting every 3 months at a
quarterly.
time, quarter to quarter, earnings per share, things like that. They may have long-term strategic plans, but unfortunately, and this is something I emphasize in my finance classes, 3 months does not a product make, right? You
Right.
got to have a longer viewpoint than every 3 months. I'm not a huge advocate of even reporting out earnings per, or guidance, it's called, earnings per share every 3 months. I think it sets the wrong expectations for management and for investors.
So what happened then with lemons? If all of this research went in up front, and I know lemons did well for Ventura County farmers for quite some
For
time.
generations.
But then now we are entering into year 3, 4, 5
Year 5.
of lemons actually costing farmers to grow. What happened?
Overproduction.
With that? Overproduction?
Yeah, you had a great run of lemon pricing for a number of years, and people jump into that. And also, the ability of other countries to grow lemons as efficiently or maybe even more cost effectively than we can. So the number I have heard, and I can be corrected, but the number I have heard is we're about 35% overproduced in lemons now. And so you've got a supply-demand imbalance. And the only way to correct that is to get the equilibrium back into place by pushing out lemons or growing them in areas that are maybe lower cost areas where they can make a buck.
Okay.
But years ago, The Economist magazine wrote something, and I stated this at a farming conference where I was speaking, and the quote goes something like this, and I'll paraphrase it. The author said, crops that demand low wages should be grown in low-wage countries, not in high-wage countries. I thought that was a very telling crop. A lot of the things we still grow here demand wages that are competitive to other countries that don't have minimum wages that we have. That and the consumer, as much as they like to say, I want to know where my food comes from, I hear that all the time, but at the end of the day, and I hate that term, but at the end of the day, folks walk into a grocery store and they shop with their wallet.
Right.
And if they don't think that they're getting a good value for their dollar, they're going to look for something that they get a better value for their dollar. Well, companies know that, and they're going to, we can grow things all over the world now. Strawberries, avocados, lemons, celery, cilantro. People are going to move where they can be competitive to sell their product. Until at some point the consumer says, I absolutely demand that again, something I like to say, have you ever went into the grocery store and asked the produce manager, I demand to pay a higher price for a head of lettuce?
Never.
Never. Exactly.
Never.
Never. And so consequently, as producers are going to find the places that they can produce their crop and make a profit.
Okay.
It's just pure economics.
So getting back to the land portion of this of the leg of the stool, you view water as a part of the land. Can you talk more about that?
Sure. I think the most important aspect of the value of land for a farmer is the water here in Southern California. They used to grow dryland beans here. My grandfather did. We don't grow dryland beans anymore. They used to grow sugar beets here. We don't grow sugar beets anymore. They used to grow walnuts. They don't grow walnuts anymore. Things change. And I know a lot of folks don't like change, but change is a good thing. Things change. And the water is an integral component to be able to keep up with the changing of the crops. The water, again, I love old sayings, whiskey's for drinking and water's for fighting over. And that is true. And the water you've pumped out of your land, I view it as yours. You own the land, you should own what's under it. If you have oil under your land and someone wants to drill, they have to pay you to drill for that oil, and you get a piece of that profitability. If you have water under your land and you've pumped that water is yours. It's a property right. And we don't give up property rights in this country easily. And neither do I. I think it's a property right. And that property right, that water, has a value separate from the value of the land. That water, like oil, should sit on your balance sheet. And what I have found in my libertarian way of thinking in economics is when someone owns something, they tend to conserve it more than if something is given to somebody. And so you think about that. When you own something, you tend to take care of it. You take care of your home if you own it. You take care of your car if you own it. If someone were to just hand you something, you tend not to take care of it as much or as diligently. Water is no different. That water is a scarce resource. That scarce resource has a value beyond the crop you're growing. It's a vessel to grow the crop, but it has a value beyond that that may be much more valuable than the land it sits on, especially in Ventura County because of the restrictions we have for land that we can only farm, but that water has a separate value to it. And I've seen that in water trading activities. You can capitalize that water out at a very different rate. So think about this, Louise. What if tomorrow some politician says, you can't grow any crop here that requires a pesticide, or you have to grow it all organically? Okay, you can, all right, great. Some people would probably be able to work within that system. I certainly couldn't to make a living to live here. So what else do I have within that land asset? I have the water. That water can be used to sell to maybe the farmer across the street that has a shortage of water. Or that water can be taken and used for a development of some type. So that water has value, and it's a property right. I know people don't like to hear that, but I think it's a property right.
Almost as it sounds, the way you're describing it, almost as if the water is a crop.
Yes. Water is a crop that needs to be conserved and used to its highest and best value.
So how do we quantify that? How does that
Markets
happen?
quantify things. The answer to most ills in life is a robust market. If you go to the grocery store and buy a head of lettuce for $1, that's what the market says it's worth at that point in time. If you go down to the store to buy a new computer and that new computer's $1,000, that's what the market says it's worth. Markets solve a lot of ills. The problem why a lot of folks don't like markets is because they transmit information in real time. Think of the stock market. If you were to pull up the quotes right now of your favorite stock, you will see a stock quote in real time of how investors are valuing that company. Mm-hmm. That's what a water market does. Or if you go to sell your house, you're going to see, a realtor can tell you, well, the house next door went for this and this house went for that, and you kind of get an idea of what your house is worth. But you really don't know until you have active buyers bidding on your house. Then you start to understand, okay, now I see what the value of my house is. No different with water or the land. Active markets are really important to understand information.
So is this happening anyplace else? Has water been valued?
Well, we had a water market here that operated for a short period of time that we saw what people were willing to pay for water. A water market was just formed up in one of the Tulare basins. There's been water markets in Australia for decades.
Wow.
On the Darling Murray Basin.
Talk about a place where water is scarce. Right?
Very scarce.
Yeah.
That's why they went to it. And the federal, apparently, I don't know all the details, but the Australian federal government is the one who created the market to be able to allocate a scarce resource more efficiently. But when one entity controls water, like a monopoly of some type, then you have a disallocation of a resource. Then you don't have a true pricing. It's active trading between you and I all the time, that for any asset. And I like to, when I tell my quantitative finance class last night, is the value of any asset is the present value of its expected future free cash flows. The value of any asset, there are exceptions, but the value of any asset is the present value of the expected future free cash flows over an infinite time horizon. You can find a value of anything today quantitatively. It may or may not be right until an active buyer comes in and says, I'll buy it for that or not. Mm-hmm. And that's where negotiation comes into play.
And clearly, it just like everything else, there will be buyers who desperately need it,
Yes.
willing to pay, right? Versus people who have things to sell more
Well-
than what they are currently.
Well, any other form, and I don't use this word lightly, and a lot of people who view this might think, well, gosh, that's just an old tribe, but it's socialism otherwise. I could say, well, if you don't believe in that, can I have a 30-year paycheck? You're going to say no. I
already give that to the
Yeah,
government.
right. Yeah, you're giving it away anyway. But no, or if you owned a 401k that has done really well, and I don't have one, Louise, can I have part of your 401k? Because I think it's unfair that you have that and I don't. I mean, I think what a lot of folks should do is go back on YouTube and look at old Milton Friedman, one of the best economists ever, talk about things like that. And what really upsets me this day and age, and it's really happened since the Great Recession in 07, 08, is people want to privatize the profits and socialize the risks.
Talk more about that.
Well, I want mine, but you're gonna help me out if I can't have it.
Okay.
But I may not want to give anything to you. We saw that during COVID. Government shuts down, and then we have to, wrongly I'll use, maybe we were unsure of what to do when COVID came, but basically companies were privatizing their profits, but they wanted help to socialize the risks on the other side. Or the attitude of too big to fail. We can't allow you to fail because you're too big. Fail, It's, to me, I use the analogy of a computer. Sometimes computers reboot when they fail. And when they reboot, then everything cleans up again. And so consequently, it's when you try to disrupt the natural course of economics, things get unallocated very quickly. And you start to have huge divisions between, like we'll see in Ventura County, between haves and have-nots, where people that are coming into the workforce probably will never be able to afford a home here because homes are so unfortunately priced way out of reason, but it's a supply issue. So always think about in terms of supply and demand. When you have more demand than you have supply, you get a disallocation of price. So entrepreneurs will move in there to create the supply to meet the demand. But if you're restricted from having that supply to meet the demand, then all of a sudden prices get out of control. That's why markets are so valuable. And there aren't very many cases where markets don't work.
Okay. So how, practically, talk me through how the water market that you said we had briefly here in Ventura either worked or how you envision it working.
Well,
if you and I were say,
so let's say I have
farmers,
excess
right?
water that I don't need to grow my crops. You have
Right.
a need for water. We go into an anonymous market. We put a bid and the ask price in. If that price is met, you're able to buy so many acre feet of water from me at a price per acre foot to finish your crop out.
Okay.
I do that all the time out in the Santa Paula area. We lease a piece of land out there that didn't have enough water on it. So when we run out of water, we haven't the last 2 years because we've had substantial rain, but during the drought, I would go to that entity out there and I would buy water from them.
Okay. Either because they have
have excess
crops,
water to sell.
For whatever reason, they're not using all of what they're allocated.
All of what they're allocated, they're not using it all.
Okay.
And it works wonderfully.
Otherwise, what happens to what they don't use?
Well, if I was not able to do that, I would go back to my landlord and say, I'm only allowed to grow, because of restrictions on water, I can only grow one crop a year, not two. Therefore, we're going to have to talk about how much rent I am paying you for your asset. Now, some people, again, don't look at it that way, but that's how I look at it. I'm not a huge multi-state shipper. I'm Ed Terry farming here in Ventura, so I have to look at everything as not as a something for my marketing plan. I just need that product to sell. I've got to think about how can I survive here economically by not overpaying for an asset, whether it's an owned asset or a leased asset or what have you. I've got to always put that into my calculus to make sure I'm paying the fair price for what I can get out of it.
And I think another very interesting viewpoint that I hadn't even thought of before you mentioned it. Greg Lewis with Duda Farms was one of our earlier conversations, and Duda Farms here to fill a seasonal gap, so that there is celery I can go into the grocery store any day of the week, and there is celery there.
Right.
So their operational plan is a little different than someone like you, who
Right.
you farm
Here.
Ventura County.
Right. Exactly.
And so things like, what is the value and revenue of the land, and water being a part of that.
Yeah, I've had a lot of people say, "Hey Ed, you're too cheap. You don't want to pay the rent that this guy over here will pay." I go, "Yeah, I'm proud. I'm not going to use the word cheap, but I want to be correct. I have to be correct 100% of the time. And when it comes to, my hard capital, that's still part of the stool.
Yeah.
I just don't have the ability to say I'm going to overpay for that to grow a certain crop. It doesn't work like that for me.
Because you don't have another location
I'm
to
not
make it
I'm
up.
not I'm not
Yeah.
diversified geographically.
Right.
Is the way to think about it.
Right. So if we think about, water as part of the land, and pull in the capital part of it, you know, again, going back to the conversation with Lisa Tate that we had previously, Lisa threw out some rough numbers. Revenue on her that she brought in for lemons, and again, this is gross revenue, nothing to do with net, right? Roughly 15,000 per acre.
Okay.
That's the crop revenue, though, right? Water could add what?
Well, the water would add
Depending on the market, right?
Yeah, right. If in a market case, so let me throw this out. Since I'm not geographically diverse, I am indifferent whether I farm a crop or farm water, is the way to think about it. So if I am just a landowner here in Ventura County, and say a municipality came to me and said, "Hey Ed, we are short of water. For the next year, we'll pay you not to farm. In other words, we'll pay you for your water, but in return, you can't farm." My response would be, great, as long as I'm economically indifferent.
Right.
Doesn't matter if I farm water or farm pimiento peppers. Because think about this, at some point under the Sigma law, no matter how you want to dice it and slice it, at some point we're going to have to start using less and less water. The recently enacted ag order may force that as well, of nitrogen runoff and all those type of things. So you start thinking about that, and you think to yourself, well, gosh, if the city of X came to me and said, "Hey Ed, I'd like to sign a contract with you to use your allocation, and we want to pay you this amount. And if it's the same or more than I could earn farming, what's the difference?"
It's an interesting point.
Right?
Yeah.
What's the difference to me? I'm a profit maximizing farmer. Now, any farmer that says they're not is lying. We're not in this for fun. Or maybe some are. Maybe there are wealthy families out there, I don't know any, that do it for a lot of fun. I don't know why you'd want to, but it's no different than any other company. You do things to maximize the return back.
Well, and that's simply, I think most of our listeners would agree that is simply how business works.
Well,
And
again, a way for non-farm folks, if you have a retirement, a 401k, let's say, are you happy if it goes down year over year over year? Of course you're not. You want it to go up year after year after year. Well, what's the difference between that and what I do? There's no difference.
I think it even goes beyond, are you happy, right? If your 401k, using that same example, goes down year after year after year, you are not going to survive retiring, period.
No.
And so if farming capital goes down year after year after year, farming cannot survive.
And nationally, we're starting to see that swoon that you just said. We're starting to see the swoon in agriculture now.
Tell me.
Oversupply of, so a good way to think about it is when you look at corn, soybeans, wheat, the commodity crops, they're starting to be oversupplied again. And you're starting to see some stress within the system like there was in the 1980s, not to the extent of the 80s, but you're starting to see stress where costs outweigh the return. The issue we have now is we have a lot less farmers now than we did 40 years ago. And it's projected as we go further into time, we're going to have even less. I think there's maybe, again, I'm trying to quote a statistic. I think agriculture, GDP of agriculture, just farming, is, call it 400 billion in the United States. If you look at the breakdown, what's Walmart's sales? 600 billion?
Yeah.
So, less than 1% of the population is on the farm now. Probably 0.5%, and it's not going to get any greater than that. It might even be less. And as you have more productivity around the world, that supply is only going to increase more.
So, talking about the revenue and nationwide, but that's something I think we're seeing here, and we've seen here for at least the last decade, where the Ventura County Ag Commissioner end of July just released the last year's crop report. Right, sounds fantastic. $2.1 billion industry here in Ventura County. That's gross revenue, though.
Right, gross revenue.
And one of the things that I did when I first started working, with agriculture is I went back and I pulled as many of the crop reports.
That as well.
Yep. It's been 2.1 billion.
Well,
Flat.
on an inflation-adjusted basis, it's less.
If you adjust for inflation, it's
heading down to the.
It's heading down,
Yeah.
right? And nobody is stressing that this is gross revenue.
Right.
But talking with farmers, talking with you, talking with just the farming community in general, expenses are through the roof.
Yes.
At some point, this is unsustainable.
Yes.
What do we do? How
Well,
does
what
this
it
change?
does, it drives. If farming's going to remain here, and let's say you had this trend going forward, you and I can't speak for every commodity, but what I do, you're just narrowing the pool of growers, and the pool of local growers, which turns into larger and larger growers that may not even be based here. That, as was mentioned earlier, that I need to be here for a certain amount of time for a certain crop, but I may not be based here. That's what you see everywhere. That's what you see everywhere. And those larger and larger entities may not even be owned by the families that started those entities. They may be owned by private equity groups or investor groups or things like that. And again, that's happening nationally, not only here.
Maybe even foreign entities.
Sovereign wealth funds are very much involved in U.S. agriculture. You hear that and read that all the time.
Wow. So, coming from a family that's farmed here in Ventura County, almost 30 years,
yeah.
right? And your children involved in farming. Ventura County, we can't go 4 blocks outside of this building without crossing streets named after a lot of the ag families that built this county. But it sounds like it's shifting. And what are your thoughts on that? What happens when we no longer have our local family farms that have been here historically?
You move on. I mean, again, as I mentioned, change is usually good, and it's just something. There always will be local family farmers for the foreseeable future. the configuration of those family farms and who they grow for. Look, I grow for larger companies, much larger companies. I like to tell people I'm too big to be small and too small to be big. So I'm dependent upon larger companies. So we provide a service to grow a crop for them. I have no illusions that we'll ever be a multi-geographic, multinational company. That's not in the cards, never was in the cards. We didn't aspire to do that. So consequently, you just move on. And you forget about the fact that, you know, Mr. and Mrs. somebody's streets out here. Great. You go down to Orange County and see the same thing.
Right.
Right?
Right.
You can drive into the Central Valley and see the same thing. That's just what happens.
I think, though, that it's a conversation or an awareness that both our elected leadership and our residents of this county haven't recognized
No,
yet.
and this is something that I think, and you're never going to change perceptions, but it goes back to, like I mentioned earlier in the conversation, I think a lot of folks, and I shouldn't generalize so much, but a lot of folks look at it as Ma and Pa out there with the pitchfork.
Right.
That analogy. And isn't this quaint? Isn't this cute? But oh, by the way, I love to have some greenery between me and the housing tract across the way. When that area between those housing tracts should have been developed out. Because as someone who farms in those islands, on those islands, it's not a lot of fun to get yelled at by neighbors all the time about legal activities that I'm doing out there.
Tell me more about that.
Well,
about the challenges of
dust,
of the
pesticides, runoff, those type of things. Folks don't like them, you know. And if I moved into this county, I may not like it either, but I like to see the green out there. I love to see the celery, how beautiful it is. But I really don't like all the farm workers that come out there with forklifts and equipment and making noise at 6:30 in the morning when I'm still in bed on a Saturday. That ag-urban interface, which has been discussed here since I got out of college in 1981, is still very much there, hasn't changed, and is only getting worse. Now, as someone who lives in the community, I am one that, and my kids and my wife are willing to talk to people. How can we work with you next door while we still get our work done? What can we do? We're there. We're not moving. We're not going to brush you off onto my foreman. We will be there to talk to you. As you know, Louise, my wife has a fruit stand, and people come over there and they like it, and they'll discuss with me about issues, and I'm more than happy to talk to them about it. But that's us. That's the Terry family. That's the way we were all raised. Be part of the community. Be active in the community. I can't speak for other growers and what they do.
Right, and I think as we see this shift happening, where there are fewer of Terry family types, people who are enmeshed in the community, versus these larger, equity fund investors, etc. I think I'm worried we're going to lose some of that.
We will. There's no doubt.
Yeah, and I think that's just something that the people of Ventura they're not aware of, and they haven't begun to have the conversation of, do I think Ventura County will stop becoming an agricultural county? No.
No, not in the foreseeable future.
No.
Yeah.
But the character will change.
Yes.
And I don't see us having that conversation at all yet.
And I don't even know how do you even open that forum up?
Right.
And without getting into a shouting match, right? And
well, the hope is that we can have a conversation.
Well,
but,
look, it's much better to sit around a table like this and talk about issues instead of throwing tomatoes at each other.
Yes.
I'm a huge advocate of that. I think the ag community should do more of it. The problem you have is a lot of growers, and I've talked to a lot of growers about this. They are afraid to speak up. They're afraid to get in front of people because they're not used to getting in front of people. Look, I'm a loudmouth. You know, I'm not one of the blessings of being able to teach is to stand up in front of people and talk.
Yeah.
So I'm also very passionate about what I do, and we want to do it ethically and correctly. And so if someone thinks I'm not doing it ethically, I want to hear about it. Why? Do you? And you know, the hope is that I can convince them that we're doing exactly. You know, we have this rule at our ranch. You know, not the spirit of the law, but the letter of the law. Whether we like the law or not, we're going to follow the letter of the law. And that's what we try to do.
Well, that's admirable.
Well,
Difficult, but
it's very
admirable.
difficult. It's very expensive. And you know, so when you mentioned gross revenues, whatever those gross revenues are, if you average it out over a 10-year period, it's about a 2 to 3 pre-tax margin from the crop report.
Right.
So if it's $2 billion, take 3%, whatever that number is, and then take off your taxes, and that's probably what the net return is. There's exceptions, but I'm just saying on average, that's about what it is.
Okay.
It's not Apple computer selling
Right.
iPhones.
Right. And that assumes, you know, we don't have huge upticks in various expenses as well. Right?
Well, the economic theory says over long periods of time, and this gets back to your point, over long periods of time, a company should grow by the rate of GDP in the country, which is about 3.5% over long periods of time. You will have points in time where you do that, right? You'll have just an explosion in growth, but over long periods of time, about 2.5%, 3%, maybe 3.5% tops. That ag report is nowhere near that.
No.
In fact, it's negative.
And it's not even taking into account, you know, there was a report released 2021, I believe, during COVID from Cal Poly San Luis Obispo, where they looked at a decade worth of regulatory costs to farmers across.
About 13% of gross revenue.
Yeah.
Yep.
Yeah.
Very aware of that.
And growing, right? As new labor laws pass, as new, you know, the cost to comply with regulations in the state of California continues to grow, but our gross revenues
Are flat.
are flat, not even adjusted for inflation. Right?
Yeah, no,
So,
I think it's a phenomenon, and you see it nationally. Again, there are exceptions, and you'll have exceptions for a period of time, but there's a leveling effect over long periods of time. And when you have big spikes in inflation like we've had the last couple of years, the revenue on the farm nowhere is near that.
Right.
It's flat to negative.
Right.
And when people go to you and I go to the grocery store, it's really expensive.
Yes.
And the grocer's only probably making 2 or 3%. So you've got a lot of folks between producer and supplier, you know, end user. There's just a lot of stuff in between.
And a lot of stuff even before,
Yeah.
right? Because the farmer has to go out and get fertilizer, has to go out
Well,
and get
here's a great
materials.
example. The strawberry, the 4 acres of strawberries we grow, our plants are up 100% over 6 or 7 years.
What do you mean 100%?
100% increase in cost.
Okay. Wow. Wow.
$6,500 an
Wow.
acre for the plants before
For
you
the
plant.
plants.
Before you plant them. I just got the bill 2 weeks ago, and I was like,
Wow. Wow.
and you know, so the nursery's trying to keep up with their expenses.
Right. Right. And that explains a little bit, clearly nowhere near all of it, but why you go to the grocery store and you're like, how much for this basket of strawberries?
Yeah, it's surprising it's so cheap.
Right. Exactly.
Yeah.
Exactly.
And that's the supply side of it.
I mean, if just the plants alone, 100% increase, the fact that strawberries at the store only, and I use that almost facetiously, went up 25% is amazing.
Yeah, yeah.
Wow.
So I mean, food. You know, and I'll go back to property rights. Food is not a right. You know, some people say, well, it's a right. You have a right to food. We have a right to buy food. Right. It's not a free resource. Again, it's by like Amgen here in the county, one of the, you know, forefront of technology and biotechnology. They don't give away their products either. So the thing about ag that's different though is it's a highly, without using too many economic buzzwords, the price, it's truly a free market every day of the week. the price is dependent upon the supply. And the supply of most vegetable products, anyway, are in oversupply, unless there's a weather event or something else. But most of the time, there is an abundant. I never really walked into a store and not been able to buy a head of lettuce,
Right.
unless someplace got flooded out. That's a weather event, but not for any other reason.
And even then, even though the weather event may have caused devastation
It's a
to that
temporary
region,
disruption.
exactly, and the area impacted will be disrupted much longer than how long lettuce won't be available.
Right,
because
it'll
another
pick up
region
somewhere
will,
else.
right,
It
will
picks up
fill in.
somewhere else. Yes, exactly. That's the beauty of agriculture too, because we're able to adapt so quickly.
Yeah,
We're able to adapt so quickly.
yeah, wow.
But again, it's land, labor, and capital.
So I've seen now, just in the last week, 3-4 articles talking about ag trade deficit, and that it's growing, it's increasing, and next year is projected to be record high. What is it, and what does it mean?
Okay, I saw that same graph, and I was surprised at how big the deficit was. When I was much younger, we had a trade surplus in ag, meaning we exported more ag than we imported.
So the United States fed the world.
Fed the world. Now it's completely shifted, and I was talking to a very smart CEO the other day, and he brought up this other point, the fact that both presidential candidates are talking about tariffs. It'll even exacerbate it more.
Really?
Because it's used as a weapon then.
Wow.
You know, so, but it also illustrates the fact that other countries are able to produce commodities that we desire and are able to import them, or we are able to import them in such quantity that the trade deficit is going negative. That was frightening to me to see that number, because that's a sea change from where it was 40 or 50 years ago.
So just to make it really basic, things have flipped. The U.S. used to produce
Is
more.
a net importer.
Right. We used to produce more than what we could use and sell to the world.
Right.
Now we produce less, and we are
Oh
importing
no, not
more
necessarily.
and more.
Not necessarily.
No?
We produce less. We
Oh.
may be producing the same or more,
Oh,
but our competitors around the world may have the same product for a lesser price.
okay.
I forget who made this quote, or did this quote, but you know, China has exported a lot of deflation to the United States through cheaper products and
Cheap
services.
goods,
Yeah, so that's the way to think about it.
Okay. So
I'm not saying it's the Chinese and food products. I'm just
Right.
saying that some countries are able to export food deflation into the United States.
So other countries, because clearly, or I'm assuming rather, not clearly, but I'm assuming the businesses in other countries still need to cover their expenses, still
Absolutely.
need to make that.
And they're becoming
that
more
profit.
productive beyond what their own population needs.
Right.
It's got to go somewhere.
Well, and they can pay not only to produce, so the land costs, the labor costs, covering the capital, etc. Harvest, and then pay to ship it here, and it still is less
Pretty frightening.
than in expenses.
Pretty frightening. You know, countries are going to evolve, you know, and ag, like any other industry, gets more and more technically proficient. South America, you know, you've got Chile and Peru with lots and lots of avocados and blueberries and things like that. You have Argentina with lots and lots of citrus. You have Mexico with citrus, avocados, lots and lots of row crops, very, very efficient hothouse nurseries down there now. Well, all of that increased productivity's got to go somewhere.
Right.
And they've got a giant customer in North America and willing consumers that, as we just talked about earlier, are going to shop with their pocketbook. And I'm a firm believer that as much as everybody talks about knowing where their food comes from, it still comes down to the dollar.
Right. How much is this going to cost me?
How much is this going to cost me for what I'm preaching? How much is it going to cost me? Well, maybe I don't want to preach that heavily anymore, right? And again, I'm not casting judgment. I'm just saying that's just economics. That's just economics.
Well, and with inflation too, right? People are more limited.
Well, sure.
They have to be wiser consumers or more dollar conscious consumers.
On the way drive over here this morning, I just heard that a credit card debt in the United States is at historic highs right now.
Yeah.
People are living on their credit cards. That's not healthy.
No.
But our own federal government's living on a credit card.
Right.
And that's not healthy.
So with everything that we've talked about, and I want to thank you because it looking at ag through an economic lens, I've heard all my life, and I firmly believe that if you want to understand something, follow the money. So this conversation is really, I think, helped me understand things a little bit better, and also opened my eyes to some things that I was completely unaware of as ag as a business. But what do we need to be doing today to support Ventura County's agricultural community, California's agricultural community, and agriculture in the U.S.? Is there something we can do?
Yeah, I think don't pass any more dumb laws. Is that blunt enough? I mean, the problem you have in California is politicians have never met a law they didn't like. They're trying to solve really minor things by creating massive laws. They're trying to solve everything with a sledgehammer. And you can't solve everything in life with a sledgehammer. Why do other states in the country get along with a lot less laws than California? I don't know. I don't live in those other states. I love a quote by Matthew Fina, and he says, "We pay the price of the amenity of weather here in California." I think he's right. Mm-hmm. We have great, I couldn't imagine living anywhere else but Ventura County. I've been to a million other places, but I love Ventura County. The weather is great, the people are great, the environment here is great, but it just seems like California wants to pass every law they can, and there's a limit, and I think we've reached it because we're seeing a net exodus out of the state, with business anyway, that we've reached a limit of how much that's costing. Mm-hmm. And I don't know if there's any politician in Sacramento that would stand up in front of the legislature and say, we need to start repealing some rules. One of the biggest things that drives folks, let's just go back to the Cal Poly report that was done a couple of years ago. It's a great example. I can verify that our family farm, about 13 to, because we're smaller, but about 15% of our gross revenue goes to stuff that has nothing to do with growing the crop. It's just
like
complying.
What? Like, can you give some examples?
Sure. Well, the ag order's coming up. Right. You have all the paperwork for the water issues that are going on here. You have labor laws that we have to, and I said we try to follow the letter of the law. Just doing that, we have 1, 2, 3 full-time people to do that. We have food safety rules, so we have to follow. We have 1, 2, 3 people, same 3 people do that. You have just monitoring your environmental health requirements at our shop, which, okay, whatever it costs, the cost may be de minimis to what the county may charge us, but the costs behind it are not de minimis.
Right. Preparing the reports.
The reports. Somebody's got to fill out a form, right? What did I do? I forget what form I filled out the other day, and I go, I really got to fill. Yeah, you got to sit and fill this out. I need to be doing something in the field. No, you got to sit and fill this out. So those type of things, Louise, are, and there's so many of them. I've never counted them all, but they cost us probably 13 to 15% of revenue. Now, it creates jobs for people, but those jobs don't produce revenue
right.
to pay for them.
Right. Those people are not producing food.
Yes, they're
Right.
not. They're not. They're producing compliance.
Right.
Okay, which some people may say, well, if we don't do this, then the world will come to an end and everything will be a disaster. Maybe yes, maybe no. But when I talk to my friends in other states, they don't do that.
Right.
And they're still very upright, standing people and want to do it the right way. That drives me insane that if you have people out there that are scofflaws, then do something about it. But don't cast aspersions over an entire industry of people and make everybody suffer for what a few people have done.
Right.
That's just nonsensical.
And you've mentioned a couple of times the irrigated lands waste discharge order, and I think that's a subject that I'm probably going to reach out to Farm Bureau and have a complete conversation about, because that is going to be very impactful throughout the county for agriculture. But I think it even goes beyond, right? You've got now, as you explained it, these staff costs, these overhead costs to do things that have nothing to do with food production, nothing to do with actually operating your farm. The irrigated lands waste discharge order is not only going to add to that, but also through the requirement to construct these physical best management practices to retain water, you're actually going to lose land that's farmable. And I've talked to engineers who are involved in creating the plans for these, and we could conceivably lose up to 8% of our farmable land in Ventura
So
County.
8,000 acres
Yeah.
of irrigated ag.
And what does that do to our already flat gross revenues?
Well, I mean, the math is not hard.
Right. Right.
What's it cost to have an engineer design a retention basin for you? What's the cost of getting it permitted at the county? And how fast can the county permit them when you have 500 or 1,000 farmers walk in on the same day with a plan?
And all with the same deadline.
All
from
with the same
state,
deadline.
Right? Yeah.
So are they just going to magically wave their wand and say, it's approved?
Right.
I would be shocked if they did that.
Right.
But, and then the other interesting thing is we have so many absentee landowners here that don't farm their own land. Who's going to pay for it, the tenant or the landowner?
Oh.
And one of the things I brought up, okay, let's say I've got a 3-year lease on a piece of land and the landowner says, you're going to pay for it, you're farming it, I want a 50-year lease. Because what am I going to do, pay for it and then get kicked off in 3 years for the next guy to come in and get it for nothing?
Right. Right.
Oh, I didn't think about that. I have.
Well, and these detention basins require annual maintenance.
Yes.
Sometimes several times a
Yes.
year as well. So there's a maintenance and upkeep cost. There's going to be another reporting cost. You may end up having to hire a fourth person.
Well,
for your
or and beyond
compliance.
just the retention basins, the nitrogen coefficient.
Yes.
How do you explain to your customer that I can't get the celery as green as I like it by using the UC recommended amount of nitrogen? We're going to have to back off of that with some other methodology, and you may just not get the quality you want.
And then what does that do in the markets, right? To
Well,
the person walking into the grocery
depending
store.
on depending on the company, they may say, well, we're just going to have to work with our customer on that, or they may just say, well, maybe we move some of that product somewhere else where we don't have the same requirement.
Wow.
We don't have the same requirement.
So even bigger challenges.
For every action, there's an opposite and equal reaction. That's a truism in economics too. That if you're going to put up a barrier to me, I'm going to find how to go remove that barrier by doing it somewhere else.
Wow.
And maybe that's the end result. I was at, when I chaired VCALG for many years, I was fond of saying, just pave it over, then there's no issue. There's no nitrogen issue. Well, we can't pave it all over. Well, but that's what you're telling me.
And VCALG is the Farm Bureau's
Irrigated lands group.
irrigated lands group, right? And like I said, I think that's an important enough issue that we need to do a complete conversation.
You could have a whole podcast on that
Oh, yeah.
issue and with very smart people thinking about compliance over decades.
Absolutely.
Which I'm sure will solve the problem. I'm a huge believer that technology can solve a lot of things, and But like I said, this will be something for my son and daughter they're going to have to deal with because they're going to be going on it much longer than I will be.
So the Terry family will continue farming.
I hope to.
And hopefully into the sixth and
The sixth
further
generation is born. They're just
Yeah.
not very old, but we'll see. We'll see what happens. My dad did not force me to go into agriculture. He said, you do whatever you want to do. If you want to get into ag, you got to love ag, because he was forced to go into ag.
Oh.
After World War II to save the ranch. He wanted to go back and want to be a professor. He wanted to go back to college, but bankers came to him and said, no, you're going back to the ranch to save the ranch. He goes, okay.
Wow. Well, very interesting that you're kind of fulfilling both of the dreams of your family then, right? You're farming and you're
Yeah, I never thought about it that way.
Yeah.
I guess in some small way I am,
Yeah.
but I never thought about it that way. It just never occurred to me to think about it that way.
And that's the part of being involved with the Ventura County ag community I love is the ties that go all the way back, but then also the looking forward into the future. And
There's a lot of great farming families still here. They're wonderful people. I enjoy each and every one of them. But I will say again, things are changing and they're going to change, and we can't get stuck in that Gothic American painting.
Right.
We accept change and we move with it.
But it does sound like there are potential solutions out there, and
There's always solutions that pop up, and I think there's a lot of technology out there that may solve this, I hope, without having taken on draconian measures to solve it.
and maybe even through podcasts like this, through other conversations, and encouraging the conversations of what can we do to reduce some of these regulatory compliance costs and the like.
I think, Louise, we talked about earlier, it would be wonderful to get some of these politicians and bureaucrats and sit down. And I know all the advocacy groups do it, Farm Bureau, CoLab, Western Growers, they all do it. But there is an end to it. At some point, you reach that marginal cost where people throw up their hands and say, no more. And I don't know when that happens, but every industry runs its course in areas. I mean, that's you see it, and things move on.
Well, hopefully we can continue to push to have that conversation and figure out a solution to regain some strength in our agricultural community and allow for your young grandchildren to.
That's what they want to do. I hope it's there for them.
Yeah, I hope so too.
You got to
I
just
hope
lay the
so, too.
foundation.
Well, thank you, Ed.
Thank
Thank
you.
you very, very much. This was fascinating. We delved into a lot of topics, kind of high level, and I would love for a future conversation to have you come back and let's talk about a little more specifically things like the water market and what that could look like. Let's see what actually happens with the ag trade deficit. And is there a potential solution we can talk about with that?
I'm always available, and I love doing these type of discussions, so love to come back. Thank you for inviting me this time.
Well, thank you so much.
Thank you.
And thank you for joining us for another episode of Ag on the Edge. Be sure to like and subscribe so you don't miss any future episodes.